Alrighty, traders, good afternoon, good morning, good evening, and welcome to the Learn and Trading Room this morning. Hopefully everyone is doing fantastic and looking forward to some trading this week. We've got a lot to go ahead and cover. We're going to get excited about what's going on in the market. We had some news out last night, and it was the official rate decision, the cash rate for the Aussies, and they are moving the markets this morning. We're going to go ahead and take a look and see what's going on, and see what opportunities are out there for us to go ahead and take advantage of. And we have some other data coming out this week as well. We've got the UK rate decision as well. Don't forget about the non-farm payroll. Now, who can forget about the non-farm payroll? All right, certainly not me. All right. So, good morning, Steve. Good morning, Denise. Kevin's in the house. Good morning, Kev. We got Sham in the house as well. Michael, good morning. Always good to see Mike. And and Mike, I do appreciate that email that you sent regarding the equity management, the MyFix book thing. Appreciate that. Thank you very much. Carlos is in the house, his first time in your trading room. Thank you for the opportunity. Carlos, you're welcome, my friend. All right. Carlos here for the first time. Okay, good. All right, so what we're going to go ahead and cover is we're going to go to the 28 currency pairs as usual. All right, we're going to go ahead and cover the 28 currency pairs. We're also going to take a look at the news. See how the news has changed the direction of the market this morning. I'm going to go ahead and refresh my chart just so we make absolutely certain that the data that we have is fresh, new, ready to rock and roll. And go ahead and take a look at the calendar as well. This is the calendar for the week. And as we go ahead and take a look at the calendar, we notice that we did get data last night, cash rate, kept the rates unchanged. Oh, shocker. All right, well, that was expected. I'm not going to go ahead and make any changes to the rate. The cash rate stayed unchanged at 0.25%. The RBA statement, the rate statement came out at the same time, and we'll see how the markets react accordingly. We had, of course, trade balance coming out for the Canadians this morning. That came out slightly up. All right, from negative 2.5B to negative 1.4B. So trade balance is up. We had the revised numbers that came out a little bit lower. And then we got the ICM manufacturing and non-manufacturing PMI. That was out for the US year at 10 o'clock, just came out right now, and that came up at 41.8. They were forecast at 37.8. Oh, sorry, 37.5. So that was a bit of an uptick as well, but it's positive news for the US, positive news for the Canadians, and of course we had the Aussie data last night, or at least earlier this morning. And then tonight still we have the employment change and unemployment for the New Zealand dollar. A lot of data coming out this week, guys. A lot of data. All right, I sound like Trump. A lot of data. We're always looking at the data. A lot of data. All right, so this is what we're looking at right here. We got Wednesday. We got ADP numbers coming out for the US. Those ADP numbers is normally a forecast of what we can expect in the non-farm payroll. It's almost like a leading indicator. And we all know, listen, there's no one needs a leading indicator to determine what the outcome is going to be for the non-farm payroll. It's going to be a negative roll. Let's go ahead and take a look right here. We've got trade balance coming out for the Aussies as well. We've got inflationary expectations, quarterly data for the New Zealand on Wednesday evening. That's going to be a price mover too. And then on Thursday, we've got the UK bank rate, the official bank rate that's coming out as well. We'll check out that as well. They're not expected to make any changes, keeping their rates unchanged, just like the rest of the central banks. We also have the Friday. We thought it would be a golfing Friday. Well, maybe in the afternoon. The morning, there's some action taking place in the morning with the non-farm payroll. We've got average earnings. We've got unemployment rate. We've got a whole bunch of everything coming out for not just the US, but we also have for the Canadians as well. So we got data driven this week. Now, in our AAA session this week, we spoke about the possibilities of price moving sideways. We said that there's this possibility that we could have this being a expansionary trading week. What does that mean for those that are new to the trading room? All right, that means that we could see price moving. Let me go ahead and just grab my. We could see price moving outside range-bound breakouts. All right, so basically what it means is, and this may not apply to all the currency pairs, but it's something like this. This is a type of thing that we're expecting. We're expecting this type of week where we had price moving sideways, then we had a breakout, right? Now we're looking for another breakout, and then moving into a trend. Maybe not such a nice trend, but a trend. So which part of the expansion move? Are we down here, or are we up here in the expansion move, and then where we're looking for that price to go ahead and move? Now we could also have this type of scenario where price has gone ahead and trended down south, created a fourth wave correction, fourth wave sideways range, and then gone ahead and broken up, or first broken south, then break up again, then go ahead and trend. So this type of expansion move into trend could also take place right here. Now Robin says here, is this Gary? Yes, it is. This is Gary in the flesh. Good. Laura says, hey Gary, coming from the Chris Flex room. Great, fantastic. Hopefully you guys had a good time in the Flex room. Chris always puts up a good show. Loud and proud, says Steve. All right, fantastic. Okay, so let's get started. Let's go ahead and get started with the top of the currency. We've got a lot of currency pairs. We covered 28 currency pairs. I want you guys to sit back, relax, take a pen and paper, take notes. All right, take notes, because we're talking about setups that are currently going to be setting up. Now remember, I want to remind everyone about how we trade here in the Learn Trading Room. All right, this is how we trade. We look for support and resistance, whether it's consolidation, whether it's an uptrend, or it's a downtrend, right? We look to trade tops and bottoms of the consolidation, so which means we're looking for resistance to sell, support to buy, or if we're trading inside a trend, we're looking at selling at resistance if the channel is large enough, and then buying at support right here, right? That's how we're going to go ahead and trade. And the same thing applies in a down channel too. All right, we want to sell at the top, we want to buy at the bottom, but only buying at the bottom if the range allows us, if it gives us enough momentum to the upside. If we see enough upside move in this counter move, we may go ahead and trade that. But ultimately, traders, we want to stay in the direction of the trend. So if you want to go ahead and venture outside that and trade more counter trend, that is okay, provided that you understand the market condition that you're in. Okay. John says, how do I get Telegram? John, that's quick and easy. All you got to do is go to my YouTube channel. Inside my YouTube channel, and you can grab any video. All right, any video inside the YouTube channel, you'll see that there is a Telegram link. And let me in the description. So let me see if I can find. Here's one right here. Oh, hold on. Everyone is ready to rock. If you go ahead and get it. Let me try to see if I can pause that. All right, there we go. If you go ahead and scroll down here inside the, there you can see right here, FX Big Dog Telegram trade ideas down here. All right, and for that, that's for anyone that's interested in that. All right, now let's go ahead. Now that we understand how we trade, let's go ahead and take a look at the opportunities. All right, let's go ahead and take a look at the opportunities right here. All right. Let's go. I'm going to go ahead and save that down here, and I'll share that with John and everyone else. Okay. All right, let's go ahead and get started. All right, let me first find out. Traders, start your engines. All right, let's rumble. Start with the Aussie CAD. Let's do that one first. All right, Aussie CAD. All right, we start off with a larger time frame. I always use the daily time frame to define the tops and bottoms of the trend. And listen to me right here. This Aussie CAD right here is looking for a very strong fall to the south side. I'm not seeing a lot of divergence taking place right here. We do see a little bit as price and momentum disagree right here. It's not a very sharp move to the downside. I would like to see something a little bit sharper than that. I don't see that at the moment right now, but I do see that momentum is shifting south. And we got a little bit of test right here. I'm a keen opportunist when it comes to Aussie CAD. I'm thinking about a nice little bearish to the downside. This is also in the direction of the trend, which means, traders, that we have a long way down. We're looking at approximately 800 pips to the downside. If it goes a little sideways, we could see it a little bit more than that, 871. So this is a great opportunity right here. So Aussie CAD, what do we want to be for Aussie CAD? We want to be a seller with Aussie CAD. So what we want to do is we want to go to Aussie CAD right here. We've already said we are bearish on Aussie CAD. Resistance geared up, 1 hour time frame, bearish on. So I'm going to update this and say we're still bearish. Okay, today's date is the 5th, and hopefully some of you brought in your margaritas as we celebrate the 5th of May, which is Cinco de Mayo. And here we go. We're expecting a dip towards 86, 82. That is the first target divergence. I think we may have hit that already. Let's see, 82. Nope. No, we have not hit that. 80, 86, 82. Wait a minute. Nope, down here. So this is our first target right about here. And with this divergence right here, we're expecting price to dip down. So what we do here is we go ahead. Philip says, and it's Tucker Tuesday too. Absolutely. All right. Who can forget about Tucker Tuesday? All right. So let's go ahead and load up the bus right here. And we are going to be looking for Aussie CAD right here. And on Aussie CAD, I want to go ahead and sell. So if I take a look over here, let's see if I've got this set up correctly. All right, I am looking to sell only. Late confirmation is active. Ribbons are shut off. So I'm using late confirmation. I'm using the 1 hour time frame. 4 hour time frame is my stop loss. All right, we're good to go. Now, for those that are new to the Learn and Trading Room, let me go ahead and show you. Take a screenshot of this. This is what we use for our gear down trading approach when we trade the tops and bottoms of support and resistance. All right, take a screenshot of that right here. I'm actually going to drop this down and just show this part right here. That's it. Take a screenshot of that. All right. Everyone should have taken a screenshot of that so that they know that when we get into a scenario where we say gear up, gear down, all right, in this case now we always trade the gear up. Most of the time we trade the gear up approach. This is our settings for the gear up. We have different trading approaches, right? This is one of them that we follow. And this is actually the majority of the time we follow this. So we have a gear up. You can see here in the description here, it is telling us a gear up approach. We call that our strategy 2. All right, this is our strategy 2 right here. So with a gear up approach, we got this on a 1 hour time frame, and we're looking for price to trade below the cloud. Ha! All right, I'm using the wrong terminology here. We're waiting for price to trade below the ribbons in order for us to go ahead and confirm that we're bearish. So we're not in a trade on Aussie CAD, but we're definitely looking for this to go ahead and continue to be bearish off that resistance. Now I may have a session tonight. I'm actually very keen on doing that this evening and looking to trade a divergence setup right here. And I'm looking at this on the 4 hour. And the 4 hour, nope, 4 hours not going to give that to us. Let's see if I can get this on the 1 hour. And 1 hour, not liking on the 1 hour. All right, I'll have to think that one through first. I'll have to think that one through. I believe we're going to be bearish on the Aussie Canadian. Maybe this is not a setup based on divergence, but certainly there is going to be a bearish move on Aussie CAD. So using the gear down approach towards this target at 86.83, so 86.83 right here is our first target to the downside. And we're absolutely going to be chasing after this low down here, which is part of our downward trend, as you can see right here. Check out the downward trend. I'm just noticing something right here. That this trend that we drew in here is a predictive trend. For those that don't know, if this is the first time you've come into the room right here, predictive trend means that we're anticipating the trend line to hold right here based on the fact that we've got sort of like divergence or some sort of resistance, which in this case now, if you look at the support that we've got from the previous consolidation right here, this is the support right here that's now becoming resistance. So we have strong support become resistance right here. And then we also have a divergence on the daily right here indicating price is going to move down south. So with that being the case, we're definitely looking for price to move down. Now we will be a seller in the market provided that we trade below this level of resistance here at 91.63. So 91.63 is where we want to go ahead and stay below. And I'll be honest with you, I wouldn't be too unhappy with a rally above here and then a dip again, giving us another level of divergence here. As long as the oscillator stays below, we're good to go. But hey, we'll wait and see what happens. I believe there's going to be some good things happening for us on this in this week on the Aussie CAD. US oil, let's take a look at US oil right here. US oil is up. We're up at $25 a barrel right here. And remember, I said this yesterday. No, when did I say it? I believe it was on our Friday session. Yep, Friday session. I said if we can get US oil to pump up above $20 a barrel, then there's absolutely good reason to want to think about selling Aussie CAD. So Aussie CAD should start heading to the downside as you start pushing back up on Aussie CAD. So we'll keep an eye on that. Now, let's go ahead and update the document here. Oh, Robin says, can I grab screenshots now? A screenshot now? Yeah, you can grab a screenshot. Did you want a screenshot of this? Or do you want a screenshot of my settings? All right, there it is, Robin, go for it. All right, perfect. Okay. All right, moving on. So Aussie CAD, everything's set over here. We're good to go with that. Let's go to Aussie Swiss franc. Take a look at Aussie Swiss. Now Aussie Swiss set up. Let's take a look right here. Very similar to what you saw in the Aussie US dollar. Looks like we had a different setup though. Here we see an inside swing, creating a wave 1, 2, 3, 4, and 5. Prices come up to the 127, closed up with our 5th wave right here. We're expecting price to move south. We did get that bearish move. It did not take out that low right here. So this may just be a retest and then a dip back down south again. We're expecting price to dip back down south again before rallying back up north. So this is part of the sequence as we're heading into a correction move. Now, for those that are new, let me just go ahead and give you some input, what we're referring to right here. We're looking at price to create a 5-wave structure, right, which we've had right here already. Take a look right here. Wave 1, 2, 3, 4, and 5. There's your 5-wave structure. Once we have a 5-wave structure, then price goes ahead and moves into an A, B, C correction before it starts working its way back into a 5-wave sequence again. And so what this is what we call our impulsive move. This that we're in is called the corrective move. All right. So we're in the correction move right now. So we're expecting price to do this before going back up north. All right. And yes, on most times, all right, in most cases, we're chasing after the 4th wave lows down here. So we're looking for price to trade below this level. So we can go ahead and type up here as an example and say right here, 4th wave target. All right, there it is. 4th wave target. And that's priced at 60.61. Right, now let's go ahead and take a look and see the overall direction. Let's compress the charts a little bit. Now, anytime I cannot get all the data in, what I normally would do is go to the weekly time frame. I want to go ahead and take a look at the weekly right here. All right, so on the weekly, as you can see on the weekly right here, we do have tops and bottoms. Price, it came back. You notice right here that we had price testing this level not once, but twice. All right, yeah, we have it right here. Now, with those 2 levels being tested there at the top, it's created a great support level for us down here. Here is our support right here. And that support is being supported by this support right here. Right here. Kill that one. Kill that. There we go. I just want to kill it. All right, there it is there. So we got support, support, resistance, resistance. So what are we expecting? We're expecting price to start working its way above these old support levels right here and break through the downward channel and start working its way back up to the top of the channel. This is why we can go ahead and trade this, because there's a lot of room to the upside before price hits resistance. Okay, so we said that we're going to be trading off support right here, looking for price to continue to move bullish. So we should be bullish on Aussie Swiss franc. All right, so let's go ahead and take a look right here. This is the weekly. So we're anticipating, because we're in this 5-wave structure, that means that we're actually anticipating price to go ahead and correct itself. All right, go ahead and correct itself, and then go ahead and move north. Now what I'm going to do is I'm going to go to the 1 hour time frame. All right, so on the 1 hour right here, we're seeing currently right now that price is still bearish. So price is still bearish. Now, I believe we were trading the correction move. Let's take a look right here. Aussie Swiss, bearish of resistance. Let's go ahead and see why. All right, this is the reason why. Take a look right here. All right, we said that impulsive wave pattern complete, expecting a dip towards 5,800. Target is the first target is at 0.4. Let's see. Oh, the first target is at 5,800, and then the second target is at 4,000, 0.4,000 right here. That's the second target. And we used a confirmation on the daily. You drag that over a little bit. Actually, it was a 4 hour. We used 4 hour divergence to confirm that. So we're still anticipating that correction. So if you're trading the correction move, all right, then this would still be in play. Now, overall, we want to be bullish, but in the short term right now, we're looking for a sell back down south, looking for a short-term corrective to move to the downside. Now, we're going to stay short as long as we're trading below this level right here, 64.20. All right, as long as we're staying below this level right here, we can expect this to be just a correction move to the downside. All right. If we trade above that, obviously all bets are off, and we start to look for bullish upswings. So if we look at the daily time frame once again, then remember that this is all we're looking for. All right, we're looking for price to go ahead and work its way back down, possibly come back to retest this trend line right here, as we said, the 0.5800, and then work our way back up north. All right, that's what we're looking for right here. Now, the reason why we put 4,000 into play, I want to just go ahead and make sure everyone understands. The reason why we've got two targets, we said 0.5800 is the first target because we're expecting price to come back here before rallying. But if it breaks through this level, then price is going to chase after this downward trend line. As you can see right here, it's all the way down here, and we said 0.4000. So we could expect price to continue to fall based on this downward trend. And I need to go ahead and adjust this channel. Let's make an adjustment right here on this channel. There we go. That looks better. So this is what the channel looks like right here. So we'll be looking for price to want to go back down, further down south, as it continues in this bearish move. So this is the reason why we're selling right here, because we're expecting that retracement move. Now, Wendell says here, so are we bearish right now? Yes, in the short term. This could end up being a long-term sell, but we currently are bearish right now, yes. If you go ahead and take a look at the EA that I'm running right now on Swiss, there it is, Aussie Swiss. I'm currently holding on a short. I've got one position already in, and I'll continue to add to this position as we get price moving below those channels. All right, let's go ahead and continue. And by the way, if you take a look over here, my stop loss is at 64.11. So 64.11 will put me all the way up here. This is where my stop's at. So we're really looking to trade this big swing right here. Our target on this is right down there at 54.26. So we're definitely giving it enough room to be able to make its move and head towards that target. And if it doesn't work out, then so be it. I believe we're risking 0.25% or 0.5% on this trade. Let's take a look right here. Yep, 0.5%, 0.5% risk is being added onto this with a maximum of 1.0%. Carlos says, are you using the gear up settings? Yes. Carlos, all you got to do is take a look over here. If you see it, this is going to tell you exactly what a trading approach I'm using. All right. If you want to know what trading approach I'm using, just check out the dashboard right here. It'll tell you right here. No worries, Carlos. No worries. I understand you knew. All right, let's go ahead and move on to the next currency pair. Aussie JPY. Aussie JPY, look, if we go ahead and compress the chart right here, we can see that there are two levels. One level up here at the top, where we've gone ahead and drawn our downward channel. We have an inside channel here. Then we have an outer channel. This right here. I'm not too concerned about the outer channel. I can actually go ahead and kill that because it's really the inside channel that I'm focusing on right now. So the inside channel, we came down to support right here, but check out this. We've got resistance here at the top. We're bouncing off this trend line right here, or is the support levels over here. And we've got this beautiful rising wedge with a 5-wave structure. Remember, when you see a rising wedge, it creates a 5-wave structure, and then we break out on the 6th touch. So we go 1, 2, 3, 4, 5, and then break out. And so here's the breakout that we're anticipating. Now, if I draw this trend line going up right here, just to connect those support levels, there it is. There is a little bit of room for price to move up a little higher, but we're expecting this to move overall bearish. So Aussie JPY, we're expecting to move south, maybe another retest of the backside of that trend line, but to head south. So let's go take a look right here. Aussie JPY, bearish channel, sell on resistance, gear up approach. 1 hour time frame, bearish, and we're going to stay bearish on this one right here. So I'm going to update that. We said gap close, selling the rising wedge towards 6,100 is the first target. Sell below 69.95. All right. Bruce says, big dog, sorry I'm late. No worries, Bruce. Appreciate you being here. All right. Unfortunately, if you guys are late, you're going to have to watch the replay to go ahead and take a look at any sort of updates that I did in the first 30 minutes of the session. And yes, Bruce, just like the team says, if you're late for my session, I demand push-ups. Get down, give me 10. All right? We're doing this all military style. Will do, says Bruce. All right. All right, so this is the deal. We're going to stay bearish on Aussie JPY. Let's go ahead and take a look at our deployment. And Aussie JPY right here. We do have 2 sells already in play on this chart. We are already selling on Aussie JPY, and we are using the gear up approach. All right, cool. So we're set, ready to go. Let's move on to the next currency pair, Aussie New Zealand dollar. Let's take a look here, Aussie New Zealand dollar. Now you'll notice that I don't look at any other time frames. Because and the reason why I don't look at any other time frames because I've already got my settings. I have my settings already inputted into my preset, right? So when I look at the large time frame and I determine what the directional bias is, there is no reason for me to want to go to the 1 hour time frame unless I want to go ahead and confirm where we are with inside that setup, right? So if I look at the daily time frame, it gives me my overall direction. And then if I want to look at my 1 hour time frame, well, I'm using this now to define where my trading opportunities are. Okay. So if I look over here, go back to the daily. What do we have here with the daily? All right, we've said this before and we're going to say this again. We are range bound on the Aussie New Zealand dollar, but we add an inside downward trend line resistance. And so we looked at this, we said, could price want to go ahead and pull back? Is it possible that we want to see a pullback? We spoke about it last week. We spoke about the opportunity last week. We said, traders, let's start looking to sell off the high. And we're looking for price to move and retest our fourth wave right here, right? We're looking for price to test our fourth wave right here. That's what we're looking to chase after. So although we have, and I'm going to go ahead and mark it off right here, and this is going to be marked off as fourth wave target. Now, I'm not saying that price is going to stop at the fourth wave target, but this is what we're anticipating. We're anticipating price to start that correction move down here. And then once I get a nice bit of divergence taking place right here, right, with price doing something like that, then we can start looking to buy back up again towards this resistance and then look for a breakout of that resistance as we go to the upside target of the range. Right now, we got to think short-term bearish, right? Would you not all agree? Short-term bearish is the way to go as we come back down to support and then look for price to move back up again. So at the moment right now, looking for a short-term sell, and that's what we're doing. We're selling off that resistance. So you can see right here, I said that we're sideways, and that's because we're in that range. We're sideways, we're selling at resistance at the moment right now. We did go in with a gear down approach, right? And the reason why we went in with a gear down approach is because we are trading a counter move, and we want to pick up as much as we possibly can. So check out our gear down settings. We do this on a 15-minute time frame, all right? And this is the settings that we use. Go ahead and take a screenshot of that. All right, this is our gear down approach, right? We're using a gear down approach on a 15-minute time frame. All right. Notice we only trade in the 15-minute time frame. We're not using the 1 hour for directional bias. We're only trading the 15-minute time frame. All right, and our stop losses are going to be placed based off the 1 hour fractal. Right. Now, we also mentioned here that we'll be selling all the way down to 1.0485. That is our target on this particular trade. And we're only bearish. And by the way, we did use ribbons only on this. All right. On this setup right here, we use ribbons only. Now, normally, sometimes we don't. In this case, we did. Right? Sometimes we don't use ribbons only, and in this case, we did. All right, and we also use the aggressive approach right here because we actually expected price to move pretty fast to the downside. We use the aggressive trading approach right here. And if I look over here, not quite getting the setups that I was hoping for. Now, we got a stop loss at 703. All right, 703 is our stop loss, which is cool. All right, it keeps our stop loss at a high level. And we'll have to wait and see how this plans out right here. So let's go to our 1 hour time frame. Now I'm looking at the 1 hour time frame just to confirm where we're at right here. And everything else is bearish right now. You can see that we do have the blue ribbons below the red ribbon. So if I can get price to trade below both the ribbons right here, it'll confirm that this was just a correction move. And what I like about this too, notice here on this chart, we also have a nice little rising wedge. So if we can break below this support here, we'll be chasing after this level, and that'll confirm that the trend is back in a downward move. and that is the target that we're chasing after right down here. There it is. First target wave 4 low at 85, 485 right there. Now, Carlos says you use the up and down period at 8, up and down period at 8. What do you mean? I'm not sure what you mean by 8. Carlos, what does 8 mean? You're talking about 8 o'clock in the evening? At the settings in the EA. Let's take a look at, again, what you referencing right here. Oh, you're talking about, oh, my bad. You're talking about the trend center. I gotcha. You're talking about the trend finder right here. Yes, 8 and 8. Yes, 8 and 8. All right. Yes, thank you, Michael. Appreciate that. All right, let's go ahead and continue. So here we are with the Aussie New Zealand dollar looking for that sell-off. And again, we're just looking for a corrective sell-off. We're expecting Aussie New Zealand dollar to continue north, but as long as we trade below this downward trend line, we're looking to sell. So we're definitely going to continue to sell all the way down to this level right here. And like I said, when we get to 485, we're going to be off the table and take our profits. So let's take a look here. Aussie sideways gear down. Yep. Trading bearish towards the fourth way low at 485 right here. Remain inside the range traded. All right, good. So let's change that now. That's going to stay the same. Let's go to Aussie US dollar. Yes, that is the trade that I'm in are based off the gear down. Yes, that is correct. Yes, Karen. Let's go to Aussie US dollar. Yes, correct. Yes, ribbons are set to true. Let's take a look at Aussie US dollar right here. Aussie US dollar set up a little bit differently. In fact, we saw a 3-drive pattern right here. This was the first drive right here. Then price moved to the 127, which completed our second drive. So this is drive 1. This is drive 2. Then we went ahead and rallied up to our third drive here at the 127 right here. So we had a 3-drive pattern. We're expecting price to work its way back down. Here is our first target. There is our second target, right? So we're looking to sell on Aussie US dollar. And we're having a little bit of an upside bump right here, but we're still going to be sellers. Now, I'm going to go ahead and take a look at the dollar index. Just give me 1 second. There it is, dollar index. Let's take a look at dollar index here. We're still looking at, oh, by the way, notice that we've taken out that low. I was looking for a butterfly pattern to form, but now that we've taken out that low, this butterfly pattern is not in play anymore. Let's kill it. All right, so when I look at this, all right, I'm seeing no pattern here. Let me go ahead and compress the chart. Oops. Interesting. Let me just move a couple of things around here. All right, so there's the trend line. We've got nice support coming off there, nice support right here. Price did break above that. We got that inside channel that's creating that resistance there. Wow. Dollar index did take out the low. We don't see divergence here, so there's no actually, yeah, we don't see actually convergence. No convergence on here. Dollar looks like it wants to go ahead and move bullish right now. It's holding at this key level right here. Look at this, these tops right here. These tops are creating resistance that is now creating support for the market over here. I'm not seeing any sort of pattern. I'm trying to figure out if there's a pattern right here. I don't see that pattern. Let me go ahead and look at the upside swing. All right, these fibs don't tell me anything right now other than we did get to the 618 bounce. There's something I'm missing here. I'm trying to figure out what it is. There's something going on here. All right, let me go ahead and pull this up from the top here. Ah, that's what I want to look for. All right, so we have a falling wedge here. And we're at resistance right there. So if we are in a falling wedge, again, there's going to be a 5-wave sequence, right? So coming off the top right here, this will be 1, 2, 3, 4. I expect the price to move a little bit lower than that, 5, and then breakout. So this means, if that's the case, then this means that if we do see the dollar index dropping back a little further down south right here, and we see the oscillator is still moving up, we could have a perfect divergence level right here for buying, or actually convergence right here. So which means that dollar index hit a bit of resistance. If we blow through that, clearly dollar index is going to rally. If we hold and we dip down right here, then rally, and we get convergence, then all bets are off. Dollar strength is in play. All right, so right now I can see why, going back to the Aussie. Now remember, we do have data coming out this week, right? We have a lot of data. We just got some news out of the US. The ISM, non-manufacturing PMI, came out positive. And then we have additional news, ADP numbers. That's going to show negative. And that's why I'm thinking with this negative news right here, we could be heading south on dollar index to get to that lower low. And then we've got the data coming out on Friday. Unemployment's on Thursday. That's going to show -2. And then we have data on Friday is going to show -2 as well. Unemployment rate is shot up to 16%, and we know why. But all of this data right here is going to drive the dollar back down south. So when I look at the dollar index right here, I can see why this resistance would hold, and I can see that we haven't really completed our 5th move down south. So I'm expecting another dip in dollar index before the big rally takes place. So I would be saying that dollar weakness are in play right now. And so we're going to look for this right here to be the next level to bounce the dollar. All right. And my wife is trying to give me some conversation here, and I'm trying to lip read, and it's not working very well. Give me 1 second. All right, so let's go ahead and take a look right here. And see what we got going here. All right, so we're going to go ahead and look for price to move up. So which means that we're going to ignore. Let's go to Aussie US dollar right here. And I believe I've got it set up on a scalp option right now. Let's take a look here. Yeah, I've got it on the set up on the 15-minute time frame. Let me go to my EA and take a look right here. Yep, 50 minutes is it's a gear down 50-minute approach right here. And I'm currently slightly in the red by 0.03%, so it's not a whole bunch. Let me see how ribbons only, I believe. Let's see here, ribbons. Nope, this one actually I'm not using ribbons only. So what I'm doing here is let's take a look. We sold right at the top. Let's go to the 15-minute time frame. So we picked up a good dip down here. I'm going to hold on to this a little bit longer. And the reason why I'm going to hold on to the Aussie US dollar a little bit longer, because we are seeing a bit of weakness out in Aussie. And so what I'm going to do is, because I see the larger time frame holding up here, and we're trading that third wave move, or at least that third drive move right here, I'm going to continue to hold as long as I'm trading below this level. I want to be bearish. I'm going to mark that off, and I'm going to call that bearish below third wave, or let's say third drive structure. Let's go third drive pattern. So bearish below third drive pattern high. And that's at 65.68. Now I don't know if I kept the let's see if I added in that inside the EA right here. No, I did not. All right, I didn't add sell below price in there, and that's okay. So I want to stay bearish below the third drive pattern right here, and as I anticipate price to move down to my first and second target down here. Let me go to the 4-hour time frame. Yeah, and the 4-hour time frame did show a nice divergence right here. This is why we actually got into the trade selling it short. We had a beautiful setup right here, confirming the divergence. And so we're seeing this as just a correction move and then a further downside move towards the support. When we get to this support right here, our first target, we can go ahead and start shedding some of the profits. But for right now, we're going to stick around. All right, let's go ahead and move on. So we're going to go Aussie US dollar right here. We said sideways, sell resistance, gear down, 15-minute time frame. And yeah, we're going to stick with our guns on this one. And we said that we are selling that third drive pattern. We're chasing after target 1 and target 2. Okay, we're good. Moving on. Let's go to, I'm going to skip these two right here. I'm going to go straight to the Euro crosses. All right, cover the Euro crosses. Let's go to Euro Aussie. We'll come back to these Swiss and JPYs right here, but let's go to Euro Aussie first. All right, want to find out, those that are new to the trading room, are you guys keeping up? Are you guys keeping up? Are you guys managing to keep up and understanding exactly what's going on right here? Carlos says yes. All right, good. Nita says, Gary, will the EA still work if the ribbons template is not on the chart? Yes, yes it will, Anita. Yes it will. All right. All right, give me 1 second. All right, let's go ahead and take a look at Euro Aussie dollar and see what's happening on Euro Aussie dollar. Now, when Wendell says, how do I get access to the trading log? This, unfortunately, this trading log right here is only available to our subscribers to the room. As a guest, you don't get access to this. This is only those that have access to the trading room get access to this. All right, so let's go. Hang on, it's not opening up Euro Aussie right here. But you can certainly go ahead and take some screenshots of what we currently have right now, and that should give you at least a couple of weeks of data. All right, so Aussie, Euro Aussie right here, looking for a sell-off. And the reason for that is, let's see here. We're chasing after this support right here. So we want to go ahead and we noticed that it was a temporary rally. I don't think we're done with the rally yet. I know this, look at traders, I am not oblivious to the fact that this looks horrible. I mean, these type of swings that we're looking at right now looks horrible, right? But if you look at the overall direction right here, you'll notice that we have these outer bands, these outer channels right here that have created a good level of resistance. And so we're looking for price to come back down to support right here. So this is going to be a temporary support level, pushing price back up again. But overall, we should see the midterm move to go back down to this downward trend line, or at least this upward trend line right here. Okay, so this means that we could see retracement and then a dip. All right, so this is a temporary retracement back up again and then a dip back south. So I believe we're going to see some more bullishness in Euro Aussie dollar. And And this little dip that we're seeing right here is just going to be that temporary move. All right, so this is what we're looking for. Let me go ahead and adjust my fibs here. We're looking at this to be a move like this before a dip back down south. Let me go to the 4 hour. Let me go to the 4 hour right here. I want to see if we're getting any sort of. Right, so we did have on this, we did have a divergence level. Let me move this across. Here is our divergence right here. And so this is just a retest, and then we should see the rally. Now, I can go ahead and double check on the 1 hour time frame. Let's go ahead and do this on the 1 hour. So on the 1 hour, these are the fib moves that we should be looking at right here. So yeah, we are we're trading just below the 5-0, between the 5-0 and the 618 bounce of the upward swing, and we're looking for price then to chase after the target up here. So if you're looking for some short-term trading opportunities, here it is here. And if you're using the right trader max to get in on the trade, we'll be chasing after this right here. So you can set your targets for the short term at around about 175.99. 175.99. I would possibly use, I would go down to 5. Let's see what we're using right here. Let's see here. We're using a gear up approach on this one right here. And we did say here that we're expecting a correction move towards 170, 78.40, and we did find a convergence on the 4 hour time frame. So I'm game on this. I just wonder if we should go down to a gear down approach on this to get better opportunities. So I'm going to say, yeah, we're game. I'm game on this. I'm game on buying long on the Euro Aussie, but my game plan might be slightly different. Let's take a look here. Let's take a look here. I'm going to go to, let's see here. I want to go back to, how much room do we have before we hit resistance? Wow, we've got 1,000 pips going up there. So that's, I guess, using a 1 hour time frame wouldn't be too bad of an option, given the fact that we've got 1,000 pips going up right here, and we're chasing off to 70, 78.46. Go back to the 1 hour. Let me go to the 15. Let's take a look at the 15 right here. Well, I believe I'm in already on a trade. Yeah, I am. I'm already in on this trade. And let's go to my EA. Let's see what I'm running on the EA right here. And I've got a gear up approach. So I definitely got the gear up approach. And the gear up approach is using the late confirmation set to true. Yes, I am. So late confirmation. I've got into the late confirmation right here. Now waiting for price. So I'm actually in already. So I guess we're sticking with the gear up approach. But I'll be honest with you, if I was looking at the chart right now, I wouldn't feel bad if I was going to convert it into a 15-minute gear down approach. Because that 15-minute time frame right here may go ahead and get us tighter stop loss at what we've seen as a possible U-turn of the market. So 15-minute time frame, if you're not in on a trade already, maybe a gear down 15-minute time frame could be an option for some short-term trading opportunities. Now, Carlos says I have it on the 50-minute deployed. I would say that's not a bad option there, Carlos. I wouldn't think that is a bad option. You see, traders, when you look at the trade setup, right? When you look at the market on a larger time frame, and you look at this, you go, oh yeah, I'm looking for a correction move and then a rally. If you can go ahead and find the correction, get to the correction point, and then at that point start thinking about buying long using automation like we're doing right here, it's not a bad option, right? So Euro Aussie, yeah, I definitely think that Euro Aussie has hit its bottom right now. And I'm actually looking at the 1 hour right here based on targets, and we still have a target, an unhit target right here. In fact, sorry, a missed target right here. That price is looking still to chase after, and that's at 74.77. So this little bounce right here, especially as seeing us in an oversold condition right here, is gonna start pushing price back up again. I would think that this would be a good option. Let me go to a 1 minute time, 1 hour time frame and see if we're getting any sort of. No, I was looking for convergence here. I don't see it. Yeah. So I'm not seeing any convergence there, but certainly if we're using our 15 or 1 minute time frame, it certainly will give us an opportunity to get in on that. Now, Laura says, I've been trying to make sense of this chart for weeks. Thanks so much for sharing your insight. Laura, you're welcome. You're welcome. And again, you know, if you really look at the larger time frame right here, it tells you the story right there. It's got it, all right? We've just come off the strong support right here. We can expect a bounce to the upside. And so that bounce is going to go back to resistance right here. And that's why I say it's 78.43. That's where we're looking at resistance. And then we should come back down again and break through that support and come back down to this trend line right here. So being a buyer above this level at 65.78, being a buyer above that is absolutely key, right? Absolutely key. And so this is why my thought is let's buy long towards 78.43. If we take out that support at 65.78, then we'll be looking to sell with right trader max towards this support right here on this upward trend line. All right. Laurie, yes, I did. I actually did share my inputs on the, and I'll do it one more time right here for those that are just arrived. Go ahead and take a screenshot of that. That's my inputs of right trader max for the gear up trading approach. All right, that's a gear up trading approach right here. Okay. No worries, there it is there. And if anyone did miss the first half of the session today, please make sure that you go ahead and review that in the. Oh, hang on, you might not be able to get access to that. I just realized that. All right, let's go ahead and take a look at Euro Aussie dollar. We're going to stick with the game plan to look for that short-term bullish move towards 78.40. Let's go to the Euro CAD. In Euro CAD, we have, let's see here. We have a nice little breakout right here, right? And this is as price come back. Now look at the channel lines. All right, everything is set up bullish right here. All right. Now I know that US oil has gone ahead and ticked up today. It's traded above the $20 barrel. All right, so $20 a barrel. It's traded slightly above that to $25 a barrel right now. So we have seen an uptick in US oil over the last 24 hours. And with that being the case, this is what's created that bearish move in the Euro CAD. Now, looking at the technicals, I got to say this. Looking at the technicals here on Euro CAD, from a technical perspective, would we not want to be bullish on Euro CAD? I think so. All right. As long as we're trading above this level right here, I would think that we want to be bullish. Now, the question here is, could this just be an adjusted move? Could this be an adjusted move, and could this line right here just be adjusted, and that we're still staying inside this wedge, and the price is going to come back down a little bit lower down here? This is always a possibility, right? All right, that also makes sense too, right? So if it does push down south, that would mean US oil has to push up above $30 a barrel. It's got to go at least to $30 and then trade above that. So using right trader max helps us to eliminate this. All right, so let's go take a look at our game plan. Our game plan was to buy off support with a gear up approach, and we want to stay bullish on that. Listen here. If you remember, I've always said, as long as we're at support, we're buying. As long as we're at resistance, we're selling, right? And staying with that same concept is important. So if we look over here, we're at support. We have to keep buying. If we trade inside the channel, we can go ahead and take all bets off the table. All right, if we trade back inside this wedge, all bets for buying is off the table. And we'll then go ahead and consider staying aside and wait for the next opportunity. So I would definitely be off the table right here if we trade back inside here. All right, because I want to see what it's going to do. If it's going to just sit here inside the wedge, or if it's going to break out to the downside and then look for a buying opportunity at support again to go back up again, we may go ahead and do that. But for right now, there's better trade setups. We don't have to force anything on. All right, there'll be better trade setups. And so at the moment right now, I'm going to stick to my game plan and say that on the Euro CAD, I want to be bullish. And I'm already in on a trade. And if you take a look over here, we are buying only, right? Buy only option is only triggered right here. So we got one of our trades in. We'll see if that holds. Okay. And if I'm wrong and it goes ahead and trades back inside this this wedge right here, then sure, we'll call it truths and we'll stop buying and we'll go ahead and stand on the sideline. But right now, I'm still a buyer. As long as we're at the support right here, I see this as just a test, right? That's what it is. This is just a test before the rally. And target should be at least another target here at 160. So we're looking for the market to go ahead and target the falling wedge starting point, which is at around about 1.60. So $1.60 is what we're looking for right here. All right, so I say actually 1.6 euro. All right, so that's what we're looking for right here. Did I just say 1.6 euro? I'm going nuts right here. All right, it's a Canadian dollar 60. It feels like Monday, man. It feels like Monday today. Oh, hang on. Have I started early with those? Maybe I started early with those margaritas. Certainly haven't had my tuckers this morning. So this is what we're doing right now. we're going to go ahead and stay long. So on the document right here, I've gone ahead and said, yep, we'll stay with that. We'll stay bullish on the Euro CAD right now. All right, we'll stick with the Euro CAD bullish. Let's go to the Euro Swiss. All right, Euro Swiss. And this is what we're thinking on the Euro CAD, right? Remember the Euro CAD did this where it came back and retested that falling wedge, and now in this case, now on the Euro Swiss, we're actually trading back inside. All right, let's take a look at the overall direction first, all right, before we look for patterns. So we've got this, and this is what I like about the Euro Swiss, all right? We've got the strong level of support right here. And we said bullish above that level. Okay, we did. We said bullish above that level, and that level is at what? What price? We're at 0.60, sorry, I keep saying 1.0621. So 1.0621 right here is where we said we want to be bullish above. Let's go take a look at our EA. And let's see, we've got no trade in, but I think we've put in some sort of parameters. And by the way, I'm running the old version. I'm going to change that out. We said to only buy, right? We're using a gear up approach right here. Check it out. All right, it's the gear up right here, but we said to only buy, we only want to buy, and we only want to buy above 622. Right, we only want to buy above 622. Okay, good. That's great, because I'm going to go ahead and do this. I'm going to remove this EA out because this is my old version, 0.3. I'm going to remove that. I'm going to go ahead and add in my new version. I created a template out of that, buying only. There it is there. And I'm going to go ahead and put in that level to buy only above 1.0622. All right, we want to make sure we have that inside. And that keeps us out of the trades until we can break above that level right here. Now, we could change that level, but that level looks like a very key level right here that we have to stick with, right? And I don't want to sell. I don't think there's enough, profit to the downside to want to go ahead and sell. Not for right now. So I don't want to sell until I get better confirmation. But I do want to buy because I see that there's enough momentum to drive us back up to this level right here to retest that previous low right there. That could give us a nice little bullish move of about 286 pips. Whoa, what? 286 pips? Are you kidding me? That's nothing. All right, I thought it was 2,000 pips. All right, that really changes my mind about whether I even want to focus in on this pair at all. Well, listen here, this is the first thing that makes me think about this right now is saying, hey, listen here, if it's only 286 pips, there's no ways that a gear up trading approach is going to even help us make any money on this, because by the time we get in, stop loss is going to be too wide. We're going to have a risk reward ratio of 1 to 3. It's going to be way up at the top of this move right here. So if we get in right here, we're never going to reach our target. If price goes over here and then starts falling back south, how much money is there going to be in on this trade? Virtually nothing, right? All right, so this means we may need to change our trading approach on this, because if it does break through that level, then yes, we can go ahead and start thinking about trading this long. So let's do this. Let's venture out to say this, that if price does break above 622, all right, so 1.0622, if price trades above that, let's go ahead, and I notice something here as well. I'm going to go ahead and point it out. We have a wave 1, wave 2, this is wave 3, this is wave 4, this is wave 5. So the honest truth is, this may just be our temporary resistance. We're probably going to price drop back south. Then we're actually going to chase after the wave 4 high right here. So in the meantime, this short-term move of 286 pips is just the first move. But then after the dip and then the rally, we should see the next move giving us a 484 pip opportunity right here. Now, be that as it may, I still want to go ahead and think about doing some short-term profit trading, and I want to go ahead and trade it towards this resistance because it looks like it merges up with that trend line. So let's take a look right here. This trend line right here is priced at, or at least this, the support is priced at around about 8, let's call it 810. So 1.0810 right here. So let's do this. Let's get crazy. All right, let's get crazy. Let's go ahead and take our EA right here, and let's change this to a gear down. I'm going to load it up here. I'm actually going to use a gear down approach, and I'm going to trade ribbons only above 1.0622. I want the daily to close above that level. Right, so we're going to let the daily close above that level. I'm using a gear down approach, and I'm going to do that on a 50-minute time frame. But also, I'm going to go ahead and put a target in. All right, my target is going to be at 1.0810. So which means that I want the EA on this 50-minute time frame to stop trading once we get to that target. And the reason why I want to do that is because if price does this, and then it goes ahead and starts wanting to come back down again, I want to get out and take my profit, get out, and then wait for the opportunity to get back in again, or maybe even start selling at this point. All right, maybe even start selling at that point, and also do a gear down approach and scalp, or at least intraday, that bearish move down to 620 again. And if it breaks, hallelujah, profit. All right, if it doesn't, then we'll go ahead and look to trade it back up to our fourth wave target up here at the top. Does that make sense? So in the meantime, let's get crazy, and let's go ahead and start looking to sell only on this. Right, we want to go ahead and sell only. Oh, my bad. Buy only. All right, we want to buy only with true. I want to go with ribbons right here, and I'm going to go with the lower time frame. Using the ribbons, I'll have tighter stop losses, and it'll be able to give me my profits that I need on this trade right here. So I'm going to go ahead and okay this. I believe everything else is set up right here. Yep. I'm going to go ahead and okay this and move this to a 15-minute time frame. Sweet. Now remember, it's not going to do anything until we get above that level. So let's go change the document. Let's see here. Euro Swiss. We said bearish channel, buy at support, which we're still going to do. We're not going to use a gear up anymore. Now we're going to go ahead and gear it down. We're going to go to the 15-minute time frame. We're going to be bullish on that. We just updated the document right here, and we said price is trading at the support of the downward channel, looking to buy it back above back above. All right, so let's do this. Buy only. Above 1.0622 towards 1.0810. And I'm going to go ahead and say exit EA. That just means the EA is going to be closed out and we're not going to have the EA running anymore after that point. Let me see what else I can add on here. Let's go ribbons only. All right, perfect. All right, let's go to euro pound. All right, euro pound. Euro pound is broken south right here. We're actually in a fourth wave correction move right here. If you take a look right here, you see how prices move sideways. And so this is wave 1, 2, 3, and so 4. We're inside range. So we're looking for a further dip down here. And actually, in fact, I said that if we drop down to the 127 right here, I definitely want to go ahead and see if I can pick up some divergence on a 4-hour time frame. I'm not quite seeing it here on the daily, but I'll only start looking for it on the 4-hour when we get down to this low right here. So let's see what we've got going here. We said sideways, we said solid resistance, gear down approach, 1 hour, and we said bearish. Price holding in a bearish channel below the tight range. Target is the 5th wave. So we're chasing after that 5th wave right here. So we're all selling towards that 5th wave. And I believe we may even have a trade in. Let's take a look and see. Oh, snap. I actually went cold turkey on this trade right here. I said no trade. I said I'm can stand aside. Let me just go back here. Oh, that was last week. We managed to close out the trade last week. All right, so I actually pulled out. We closed out positions. We decided to stand on the sideline. And to be honest with you, now that we see this in a sideways range and the profit to the downside is a short move, then what I may want to do is wait for a breakout of the support and then maybe go ahead and gear it down towards this target. So I'm going to go ahead and say that I'm going to sell only below this level. I don't want to do anything until I get proper confirmation. Let's take a look and see what the 1 and 50-minute time frame looks like right here. So the 15-minute time frame has really gone bearish on us, and that's great. So that's already selling. Let's go to the 1 hour. The 1 hour has not confirmed yet, and to be honest with you, I don't want to go in the 1 hour. I don't want to get in on the 1 hour until I've broken through that support, right? I just do not want to trade unless the support is breached. I don't want to be tied up inside that consolidation right there. Just not a healthy environment to trade, right? Now, if I used a geared down approach, that would be different, because if we looked at the geared down approach, we'd be in the money, and we'd be in the money quite a bit at the moment right now. Well, not so much quite a bit, but we would have been in at about here. And our stop losses may be above here. We could have had a 30 pip stop on this. Price moved down 60, so we would have had a risk reward ratio of 1 to 2 at least. And if we tighten up our stops, which could have happened as well, I believe we could have had a tight stop, maybe 10 pips plus another 10, so let's say 20 pips. We could have hit our risk reward ratio of 1 to 3. So this would have been fine if we traded a gear down approach, but because we are not in right now, then I'm going to go ahead and say I don't mind trading below this on a gear down approach, and I'll go ribbons only. So, but I definitely want to be out of the trade once we get to that target. So if we look over here, I don't want to be trading once we get down to what's that price? 84.91. right? So 84.91, I want to get out. That's where I want to get out, right here. And let's take a look at the support here. What is this price at? Let's say sell below. Let's go sell below equal gear down. Oh man, look at that. All right, so sell below, gear down. Ribbons only. All right, so let's go ahead and put that 86.83. So 86.83. So let's go ahead and do this. I'm going to go ahead and throw in a gear down selling. Now I've got to be careful here, because if I go gear down selling, if the conditions are lined up, it's going to put me in the trade. So let me wait and take a look right here first. All right, so I'm going to do this. I'll have to go ahead and first put my conservative, and then go ahead and add on this right here. And then I'm going to load it up, gear down, and then I'm going to put those levels in. I'm going to be targeting, let's see here, target for the sell is going to be at 0.8491. But then also I was going to go ahead and sell only, and sell only if price breaks through this level, and that level is 86.83. There it is there, 86.83. So 86.83, I want at least the 1 hour, the daily candle close below that to confirm we bearish. Well done, Karen. And then if we go below that, then I'm going to go ahead and sell. All right, cool. And let's use ribbons only on this one. We said ribbons only on this one too. I'm going to do ribbons only. All right, cool. We're good. So only if we break, all right, only if we break through the support right here and a closed candle on the daily below that, we'll go ahead and start looking for ribbons only option on the 15-minute time frame. Do I have that on the 15? Let's take a look. Nope, let's move to the 15. All right. Perfect. So ribbons only, if we break below 86.83, we'll go ahead and trade that short. And by the way, on this, I think I'm going to go ahead and increase my risk management as well on this. I'm going to go with 0.5%. Still keep my maximum risk. I never go above my maximum risk, but I'm going to go ahead and look for only 2 entry points. All right. And my 2 entry points is pretty much going to be that right there. It's going to be 0.5% on each entry point. So I know it's going to be 2 entries. All right, cool. Hang on. Did I just save that or did I not save it? I've got to save it. All right, let's do it again. All right, we're good. All right, so we are using the gear down 50-minute strategy 3 on the euro pound. Now, Grit says here, where do I find the link to your Google Sheet? This Google Sheet is only available for subscribers to my trading room. As a guest, you will not get access to this Google Sheet. Unfortunately, it's only for the members. and it's inside the online university. If you remember, it's inside the online university. You get access in it through the online university. Hey, listen, you guys, I just want to give you guys a heads up. Listen, I don't know if I'm allowed to say this. Probably not, but you know what? I am the FX big dog, and I get to say a few things that I shouldn't be saying. But there is some great opportunities coming up very soon. Keep your eyes open around the trading rooms, right? Great opportunities that are coming around for the trading rooms, not just one trading room, but all trading rooms. Not only are they going to be affordable prices, but you can be able to get access to all the trading rooms at virtually the prices that you're paying for one trading room right now. Hey, I didn't say that. I'm going to delete this recording, right? But I'm going to tell you that there is some really solid opportunities coming up, because we've seen how successful traders have been through the trading rooms. And so we're going to give you access to a bunch of trading rooms: Tyson's trading rooms, Chris, my trading room, Chief's trading room, all right, at an exceptional price. And I'm not kidding when I say that, all right. And I'm proud to say that I was a key person in getting this done. Had a lot of conversations around this with the leadership team, around pricing around the trading rooms, and making this more available to our students, because this is where the success lies. It's in the actual eating, right? The proof of the pudding is in the eating, right? And that's the trading rooms. It's the eating. All right, good. Stephen says, thank you. I'm looking to add yours. Fantastic, Stephen. Good. I'm glad. Hey, guys, you having a good time? Is everyone following? Is everyone keeping up? Is everyone keeping up? Stephen says, go Eagles. Absolutely. All right, good. Very good. Excellent. Fantastic. Guys, I really appreciate you guys letting me know. All right, so let's go ahead and continue. Where do we end off? All right. John says, learned many things. Oh, John, this is just the beginning, my friend. Got a lot more to learn. There's a lot more to learn here. Robert says, Robert says you can't eat your pudding in if you don't eat your meat. All right, let's go ahead and take a look at the next trading opportunity. Euro JPY. Oh yeah, we're going to update this. We decided to go on a gear down approach, 15-minute time frame, and we said bearish. So we need to update this right here. And what we said here is we said price is bearish in a bearish channel. Let's just do this. Sell only below 0.8683 towards, let's take a look at that level. Towards 84.91. All right, and we're going to use exit EA. And I believe we used the ribbons only on this one as well. Ribbons. Ribbons only. And the reason why I use ribbons only on this one, for those that don't know, the reason why I use this is because we're already in a bearish environment. And yes, ribbons only right here. We're already in a bearish environment. So if we continue with this bearish environment, then we'll continue to trade it. Now, Karen says, what is the exit EA? That means that exit EA means that we've actually got a limit, a target set right here. There it is there. And so as we get to that price, the EA will be removed once we hit that price. All trades will be closed out with profit, and we'll go ahead and exit the EA. Steve says alert on ribbons. No, we don't have any alerts on the ribbons right now. But let's see, if you want to put alerts on your trades, guys, if you want to put alerts on your trades, all right, then just go ahead and make sure that you fill out this right here. Go ahead and go to tools. Just give me 1 second here, it's just slowing down on me. All right, go to your tools and then options, and then go to notifications. And then what you do is when you've downloaded the MT4 app on your phone, when you've downloaded the MT4 app on your phone, you'll go into the settings of your phone, or at least in that that app, and it's got a Meta Quotes ID. Put your Meta Quotes ID in there, and then enable push notifications. And when you do that, it's going to send you notifications on trades that actually get implemented through your MT4 version. So as soon as trades get implemented, you will get notifications of that on your phone to let you know when you're in a trade. So it keeps you up to date to what is currently happening. All right, let's go take a look right here. Euro JPY. Let's see what's happening with Euro JPY. Euro JPY is starting to break south right here, and rightfully so. We've come off resistance. I don't know if we try to look for some bursts. We've come off resistance off the top here. We're heading south towards this level, 111.04. So we're chasing after 111.04. The reason for that is because you look over here, we've got a 5-wave structure. Here's wave 1, 2, 3, 4, and now 5th wave is down here at 111.04. So we should be bearish. Let's take a look and see what the overall directional bias has been on this. All right, so it looks like we tried to buy the support there for a short-term rally. We said they're bullish above the daily indecision low today. All right, so which means that we were trying to buy towards 122, but we did say watch out for the support at 115.83. Now, I believe I'm off the table on this. Just take a look. No, I'm not. All right, so I've got a trade in right now, and let me see what this trade is. This is a buy trade. And yep, buy only. Let's just see where we're at on this. All right, so this was a gear up approach right here. So what we were doing here is that we were buying off the support here of the daily. All right, this is the daily support that we have right here. Now we're still at that support, despite the fact that we've got this, and let me just go ahead and get this price on this right here. I want to just get the price on. Well, I'm not seeing that. Let's go ahead and get this price here. Let's put in here strong support. All right, so we've got strong support right here. Oh, it's a little big, isn't it? Let's change that to 2. Let's go ahead and just change that to 18. Okay, So we got strong support there. Now, what you need to understand right here, and don't be that trader that gets caught up in this sort of whippy-lashy move. Take a look over here. If you look at the way price moved over here around the support, see these long wicks and pulled back up, long wicks and pulled back up right here at that support. All right, let's not get caught up in the same sort of action right here. This candle is bearish. I get it. All right, we're getting a lot of strong JPY at the moment right now. All right, and we discussed the risk-on appetite that's taking place at the moment right now. And so we're getting strong JPY. With strong JPY, let's first make sure that we've broken below that level of 115.86. The daily candle's got to close below that. We may get a spike and then a pullback and then have it something like this, right? And if that's the case, then that means that the support is holding. So I'm still going to stay bullish. If I get stopped out on this trade, it is what it is. Now I'm going to go to the 1 hour time frame, and I'm going to take a look at how the 1 hour time frame set up right here. All right, here's the 1 hour time frame. Now on the 1 hour time frame, I'm assuming that my stop loss is just below this level right here, which means if I stay bullish on the 1 hour time frame, if I stay committed to this 1 hour, I'm going to lose on this trade. Let's take a look and see what my loss is going to be. Looks like I'm going to lose about 0.5%. Looks like I'm drawing very close to my stop loss, which is at 115.44. Yeah, I'm around about 5 pips away from being stopped out on this. Now, if I get stopped out, I only picked up the one trade right here. Okay, I've only got the one trade in right here. And if I get stopped out, it doesn't mean I'm going to start converting myself into a seller. All right. I'm not convinced of selling as of right now. This just means that we have price moving down to retest the support lows right here. If we trade below there, all right, so let's go ahead and put our stop right here. That's where our stop's at right here. If we trade below and we get stopped out, I'm still going to be a buyer in the market. All right, I'm still going to be a buyer in the market. It just means that it may take us another time to get us back above the channel lines before we go ahead and buy it in again. But I'm not convinced about the sell-off yet. I'm not saying that we're not going to hit sell. I'm saying that I see consolidation right here. This is the tops, this is the bottom right here, and prices come back to retest the support. Unless I get a confirmed breakout, then a test, backside test, and then head south again, I will then go ahead and look to trade towards this target. Even though I anticipate this to be the fifth wave target, and I want to be clear on this, even though I see this to be a fifth wave target right here, I see us still inside a fourth wave consolidation. Fourth wave consolidation can be this, before I see a sell-off back to the fifth wave. So again, this right here doesn't convince me that we're going down to 111. Not yet. All right. We'll see over time if this plays out. Maybe I'm wrong, but I'll only trade based on confirmation. So if I break through the support and it stays below, comes back to retest it, then I'll go ahead and start selling. So if we break through this, I'll stand aside on all buys. All right. But if we trade back and we retest this, I'll go ahead and sell again. So let me check it in my EA and see if we've got a price level that we want to be bullish above. No, I haven't added the price above level. So if I get stopped out, then I may go ahead and switch this out and say buy only above a certain level, which looks like that level we spoke about at 115. I'll have to find out exactly what that level is, but I'll have to go ahead and put in a level right here, and that level looks like 115.87. So I only want to be buying above 115.87, but I'll go ahead and incorporate that. So let's go take a look at the details right here. We said buying above right here. We're going to stick to buying at the moment right now, but we are going to go ahead and watch that 85 level. We have to watch this very carefully right here. because if we do get stopped out, that means that all bets are off and we're on the sideline. All right, if price stays below 115.83. All right, makes sense? Alice says, Gary, you and Chris use Smart Trader to teach and show us trade setups, but I noticed you both place your actual trades on your MT4. Is that because MT4 has advantages over Smart Trader with robots like Right Trader Max? Alice, yes. It's because I use a trading robot, all right, with MT4. I use MT4 to place on my positions, yes. PCA, I have 2 trades. This is John, says I have 2 trades been selling at about 50 pips now. What is PCA, John? Now Brian says your Euro JPY trade was terrible at the top of the move. In hindsight, John, sorry, Brian. In hindsight, if you look at in hindsight, this entry point that we have right here seems like, oh, this is way up here, terrible entry point. But you have to understand everything in context. All right. Let me go ahead and clear up right here. So if you look at the hindsight, you look at this and go, oh, that's a terrible entry point. All right. But keep in mind that we're waiting for late confirmation to enter. This is only going to be our first initial trade. All right. Our stop loss is down here. But because we've got add-on function added on, John, because we don't only depend on just this entry point. We use this as an extra add-on, or at least an initial add-on, just because we want to maybe make sure that we get in on the trade because we want to see price moving back up north. But our add-ons are going to go ahead and balance out the books a little bit. If we go ahead and if price moves back up here and we get another trade entering over here, then what's going to happen is we're going to have it breaking even right about here. And so this being our initial entry point, I'm okay with that. Just let's throw some money at the table, all right? Or let's say throw some money at the trade. If it picks up our add-on, then we'll get a break-even point. We'll move our average point down a little lower, and we'll be able to make our risk-reward ratio based on that setup. In fact, if we do get add-on to our second position, what this is going to do, it's actually going to do this. Our first position right here gets us in with our entry, places our stop loss down here, which gets us in a good stop position, right? Places our stop at a very good level. So it gets us in initially. But then if we get an add-on position, let's say price moves back up here and we get an add-on position, this add-on position is calculated based on that stop right here. So what's going to happen is this initial entry point right here has got our risk-reward ratio set up right here. And because we're entering at a lower price here, right, our risk-reward ratio becomes larger. So we'll pick up maybe a 1-to-4 risk-reward ratio on the second trade, where our first trade is only chasing after a 1-to-3 risk-reward ratio right here. So we'll pick up some additional profit on the second order because of the later or the lower entry point on that. And I'm comfortable with that. I'm real comfortable with that. All right, now let's go ahead and take a look right here. All right, so let's go ahead and take a look. So we're gonna pay attention to this and see if we survive that. If we survive that and price moves up, then we'll make a decision on how we're gonna be able to trade that. I'm definitely gonna go ahead and pay attention to how the daily closes out right here. If the daily closes out above this level right here, then I'm feeling comfortable that we're going to continue to see a rally going up. If it doesn't, then there's a possibility I may get stopped out. All right, and it is what it is. Now, John says closed out now, set to buy, settings up, right trader now. Oh, setting up right trader now. I got you, John. All right, let's take a look. I think we got time for one more currency pair, guys. One more currency pair. Let's go to Euro New Zealand dollar. And then we'll cover the rest of the currency pairs tomorrow. Euro New Zealand dollar. We've come off this resistance. We've got an inside channel. We're looking for the market to go back to support, but we're not going to be oblivious to this right here. We know that we have a support level right here that price is going to bounce off that. So there's a possibility of a short-term rally. All right, let's take a look and see what we've got here on the dot. We said that we want to trade both directions. All right, we have it set to both directions. And we said that we want to, if price hits the inside channel, all right, or these prices trade in the inside channel, hit the resistance, we watch for the support at 1.7921 and 76.80. We're bullish above 79.22 and we're bearish below 79.22. So let's go take a look at it right here, 79.22. So we're basically created a pivot point around that level there. That's the October 2018 high right here. There it is there. So that's become a very significant level because it looks like price is created a pivot level around that level, right? Now, let's take a look and see what else we've got going here. All right, let me go to the EA, see what we've got running here on the EA. Looks like we have a buy in play right now. There was the buy at the late confirmation. And if we're going to be buying, where do we buy until? Let me go ahead and draw some downward trend lines right here. All right. So on this, do we see a correction move? And let me go ahead and draw some fibs. Come with the high. And so we could see the price moving back up to October, actually no, 2016 high right here at the top. That's giving us possible 600 pip rally. So could this just be a correction move to retest this rally that we have over the last few weeks or last few days? So let's take a look at the lower time frame. We go to the 1 hour. And on the 1 hour right here, we can see that we had a wave 1, wave 3, and price never got to the wave 5 target at the 127 right here. So which means that we've seen what we call an irregular flat. All right, so we're still going to be bullish. I still want to be bullish on Euro New Zealand dollar, but I'm seeing this as a short-term correction in the upside retracement that we're looking for on the daily. And so this would be my, and I'm going to go ahead and mark it off right here. This is where I'm going to anticipate resistance to be at, right here. This is going to be my support, and we're right there at it right now. Now notice how I pulled the support of the first wave, 1.618. So the 1.618 right here, that extension is now becoming support for it right at the 618 retracement of this last up AB move. So this last up AB move is creating a 618 retracement with the 1.618 of the previous wave extension at the same level. We'll see if that holds, and we'll be expecting price to work his way back up right there. Now we do have the channel lines. If you look over here, we've got the blue ribbons above the red ribbons. And so all we need now is price to trade back above. So if we can get another, let's call it 120 pip rally, we should be back in the buy zone. If it trades below that and we get stopped out, it is what it is. We may start thinking a different option. But right now, looking at the daily time frame, if we can stay above If we can stay above this October 2018 and October 2019 lows, we should be bullish. All right, actually those are highs, not lows. So right now, if the data can close back above 179.22, we should still be thinking bullish. So let's take a look and see how the data closed out. We'll review this again tomorrow. I think it's going to be really key to see how tomorrow's trading brings this into play. Now, if I look at the fundamentals for this evening, we've got some New Zealand data coming out this evening. All right, employment change and unemployment rate. And that is anticipated to be lower. So we're going to look and see how that data affects the market. So this evening, around about 9 o'clock, 9:30, I think we should be able to get a good indication as to what the euro New Zealand dollar is going to do. I'm going to stay long right now based on this trading plan. And if we do trade above here, we may be able to go ahead and trade some short-term options if you're not in a trade already. All right, traders, with that being said, that is where we're going to end today. All right, so there's the update as of right now. This is where we're at right now based on the euro crosses and the Aussie crosses. This is the two crosses that we covered today. I hope you guys had a good time. Hope you guys learned something new. And we'll see everyone back again tomorrow, same time at 10 o'clock Eastern Standard Time, to go through the rest of the euro crosses and pound crosses as we head into the week. Traders, love you guys, appreciate you guys, and we'll see everyone back again tomorrow. This is the FX Big Dog signing off.